Good morning. My name's John Morgan. I'm a partner at Pantheon and I run our legal and compliance function at Pantheon.
Go ahead, Sabine.
Good morning. My name is Sabine Dittrich. I'm working in UBS Asset Management, where I'm responsible for a global team of regulatory intelligence. So that's monitoring new regulation, but also doing the public policy work.
And
good morning, or good afternoon, or good night for some who are in the East Coast. I'm Stéphane from AXA Investment Managers, and I'm in charge at global level of, I would say, following and also anticipating as far as possible any type of regulatory development which might affect our firm globally.
Great, thank you very much. And let's just jump right into it. Look, our world has changed significantly over the last 6 months and since the beginning of the year. COVID has changed how we do business. Obviously, we're all sitting in our respective homes having these conversations and not in a wonderful hotel in Amsterdam. Could you, and Stéphane, since you were last in the intros, we'll start with you. Could you tell us a little bit about your organization and how COVID is affecting you, and have the regulators or anyone else kind of, reached out to all of you?
Okay. Do you hear me well?
Yes, very good.
Okay.
Nice and clear.
Okay, good. Basically, AXA IM being a global firm, in a way, we were first affected by COVID in Asia. In particular, in our Hong Kong office, we had to take measures at the very beginning of this year. And so we started adapting to COVID within our internal organization very promptly. We started, developing alternative teams. We had the red team and the blue team in order to split our sanitary risks within the firm in Hong Kong. And later on, when COVID issue arrived in Europe, we were, in a way, lucky of the Asian experience to adapt it very fast as well. So in terms of internal organization, it was rather easy to adapt, to be frank, in particular in Europe, thanks, if I may say so, or in spite of the Asian experience. So it worked rather well. And to end on that COVID adaptation, in terms of clients or investors, overall, since the beginning of the year, we have got net inflows. We suffered from outflows, slight outflows in March, but over the year and until the end of August now, we have got a positive net new money subscribed.
Always a good thing. And Sabine, can you tell us about your organization's experience?
Sure. So, I guess the attention of regulators was, as Stéphane pointed out, really on business continuity to some degree. So, of course, also in UBS Asset Management, and then on market movements as well. So, liquidity risk. So, how do certain fund types perform? So, there were regular check-ins by regulators on money market funds, for example. I think ETFs and real estate funds were as well funds they were interested in. That continued probably until roughly June, early June or so, that regulators would regularly catch up with us and require really information. And since then, I would say things have really calmed down when it comes to the COVID front. What I would probably expect going forward is that regulators are still thinking about lessons learned from this, in particular when it comes to the use of leverage and liquidity risk, and how you can adopt to markets, whether it was good in the US, for example, that the Fed moved in and provided liquidity in some markets. So that sort of aftermath and the lessons learned out of it, I would expect that this comes later this year and will continue drawing attention by regulators in 2021.
So we've seen a number of clients have regulatory exams, either they were already going on or targeted ones, looking at COVID and the impacts of COVID. John, have you seen anything like that in Europe? Has the FCA been active in that space? And have you heard anything?
Certainly, we've received questionnaires from the FCA asking questions about things like liquidity, cash resources, whether or not we've accessed government support schemes or furloughed staff. It really impact on the business model, and a focus, as always, on sort of operational resilience and pandemic preparedness. Albeit this questionnaire came out 3 or 4 months after the pandemic hit Europe. Similarly, we've seen that in the US. Not that we've received it directly, but we're aware that the SEC has got a questionnaire that's doing the rounds, asking similarly about sort of business continuity preparations. And we've also had inquiries from our, we've got a licensed broker dealer in the US, and we've had inquiries from our FINRA representative as well. So seems to be sort of general interest from regulators, about sort of pandemic preparedness and BCP planning. Beyond that, I think it's worth saying that sort of we've seen sort of like others, forbearance from regulators in certain areas, sort of the time relief, limited relief for late filings, changes to the senior manager regime, those sorts of things that the regulators have announced. But I would say they're sort of in the nature of sort of limited relief rather than any sort of big sea change, regulatory policy changes or anything like that. In fact, I think if anything, it's all been business as usual on that score.
The U.S. regulators, more the justice side of it, the FBI and such, have been talking a great deal about cybercrime, fraud in the COVID cases. Have any of your organizations kind of seen an uptick in whether it's hacking or probes or any type of fraud really tied to the COVID or tied to how you've operationally changed?
If I may jump in, Stéphane speaking. As an example, in France, the French AMF indeed stressed that higher risk of cyber attacks during COVID. And so just as an illustration, so the French AMF communicated a lot on that risk very promptly after the arrival of COVID in France. So yes, indeed, it's very similar to the US SEC. There was an important stress on that, knowing that in terms of trend, in any case in Europe, there is I would say, a medium-term action planned at EU level to enhance cyber security within asset management firms in any case. So there was a French regulators communication on cyber, but with a wider background of higher cyber security measures to be applied by European asset management companies in the next few years, probably.
I mean, I would say probably in the UK, on the banking side, but then also on the FCA side, operational resilience is in any case a hot topic. And that includes, of course, cyber risk and a couple of these elements that were now relevant under the COVID crisis. So I would expect that this is a topic. So the FCA still needs to finalize its rule set here, but I would expect it's a topic also that we will see across Europe, stepping up really and getting the attention.
Hey, John, let me ask you, one of the biggest things we've seen in cyber exam findings in the States was that firms aren't looking at their third-party vendors enough, and they're not doing that ongoing support and those ongoing checks. Have you guys had to change any practices? Because I've seen a lot of clients trying to figure out how they do due diligence. Sorry,
I lost the end of the question there, but I think I understood. I mean, we've always had a robust sort of vendor oversight, vendor management program, but specifically in the context of the pandemic, we have indeed reached out to all of our critical third-party vendors, and then that was in February or March. but then have maintained a sort of consistent dialogue with them too, with regular updates and check-ins to monitor, operational effectiveness and whether their business is able to service our needs on a sort of working from home platform, and obviously to make sure that they can discharge their obligations to Pantheon. And so that's something we've got in place with all of our critical third-party vendors.
So we've talked a lot about COVID. The world has obviously changed and been in flux for this period of time. But we're all starting to look at 2021 and what comes next. What happens after COVID? What are your organizations looking at from the regulators kind of over the next coming year? And I know that seems so far away in some cases, but Stéphane, do you want to start? I keep starting that way on the screen. Okay. Sorry.
I don't mind. Okay. So thanks, Alan, for asking. So basically, indeed, during the COVID, there was no significant failure in the regulatory framework applicable to funds or the fund industry, which I think is very positive because it shows the resilience of regulations and I would say the appropriate regulatory framework we had before the COVID, because globally speaking, we were able to pass through the COVID up to now, at least, without any significant or systemic risk occurrence, So this is the positive side. And from a European or European Union's perspective, the European Commission, for the time being, I would say, remains rather neutral in terms of enhancing or not the regulatory framework, which is rather positive, I would say, as compared to the other cases. However, still at European Union's level, the European regulator that you may or may not know, maybe in the US, which is named ESMA, the European Securities Markets Authority, ESMA, which brings together all national regulators in charge of securities. ESMA, the European regulator, wants to enhance the fund framework for the next few years, being either the UCITS framework or the non-UCITS, what we call AIF framework. So it's a point of awareness for our attendees. There is a significant risk of regulatory enhancement in Europe, at EU level at least, in the next few years. This is the first risk coming from ESMA. The second risk, which is already underway, a business risk, is about ESG. ESG is both an opportunity and a threat for the fund industry. Typically at AXA IM, it's rather an opportunity because AXA IM has been involved in ESG matters for many years now. However, once again, for the awareness of our attendees today, I think that ESG regulatory action at European Union's level will require fund managers, among others private equity managers, to adapt to that new regulatory framework, and they will have to be ready on some parts as early as next year. And even in the CLO management, in the leverage loan management, in very specific segments, I would say such fund managers, among others, will have to adapt to the new ESG framework. I will not develop longer on that, but of course, I will be happy to do so later on if you wish.
So a year ago, when we had a panel similar to this, everything was Brexit. We talked, almost the whole day about Brexit. And I know there's another panel covering it, but I think we would be remiss if we didn't talk about that in the regulatory updates. And John, do you want to come in and talk a little bit about that?
Sure. I don't think we want to go over all the sort of potted history of Brexit. As you said, there's another panel covering this. At Pantheon, at least, we've had we've developed a plan to address Brexit, and have really taken advantage of the transitional period to fine tune those plans. But they're substantially in place, and indeed now being sort of dusted off the shelf in anticipation of the end of the transitional period at the end of this year. What's interesting in terms of regulatory development, and I think it's something that Stéphane was alluding to just now, was the enhancements, as he called them, that ESMA is proposing, and specifically the letter from ESMA to the Commission about the potential revisions to AIFMD, and specifically encouraging the Commission to look again at the delegation model, on which, of course, many AIFMs rely, and indeed managers of UCITS funds rely, and there was that sort of implicit threat, I think, in that letter that came out from ESMA about a month ago, I guess now, that was sort of, as I say, encouraging the Commission to look again at the delegation model. That's got a long way to run. I don't know where it's going to come out. I don't know to whether that's connected to the Brexit negotiations and the status of those negotiations. It seems to me that there's a lot of shadow boxing going on in the press right now. All I can say, though, I guess, is that if that threat plays out, that's sort of quite detrimental to the Brexit plans of a lot of UK asset managers.
Sabine, when we were preparing for this, we talked a little bit about Asia and some of the things going on in Asia. I think your organization is truly global. Can you tell us a little bit about what you're focusing on in the Asian world and what people should be thinking about in terms of regulation there?
Asia is actually often a region that follows trends that they see in Europe and sometimes in the US, but often actually in Europe. And so what we just saw like over the last 2-3 months is really an uptake in the SFC in Hong Kong and MAS in Singapore looking into ESG. That includes ESG risk management, but it has basically in Hong Kong also, there are discussions that are not yet in a public consultations, but there are initial discussions among the industry around basically every element that you also see on the ESG agenda here in Europe. So it's clear, it's sort of like guided by what the European Union had been doing, and it's picked up now in these two countries. Liquidity risk management, actually, that was something that we also saw coming up now in Japan, or stewardship code. So I would say probably that these 3 elements, so stewardship, of course, is part of ESG, but that's at the moment what keeps us quite busy in these 3 countries. There are in Hong Kong, there's another initiative now on the plan. It goes a little bit, maybe not directly, but a little bit in the direction of the cyber risk discussion that we had. So it's about external data storage providers. So how delegating data storage needs to be regulated, and the Hong Kong regulator is taking initially at least quite some strict views on that, of whether data needs to be stored in Hong Kong, for example, and how these data storage providers, such as well, of course, Amazon or Google and so on, cloud providers, how they need to interact vis-a-vis the SFC, which of course normally doesn't have any regulatory power over these companies. So I would say that's sketching it roughly, and then things around senior manager regime. We see that we saw it in Hong Kong. We see it now still in the doing in Singapore. So it's a little bit inspired by Europe, often the UK actually, and then it swaps a couple of years later or 6 months later. It sometimes swaps into that region.
Interesting. So the US in the private equity space, there's really 2 things. One, the SEC issued a risk alert recently talking about conflicts of interests for private equity funds, and it was truly private equity fund. And also at the same time, the FBI raised concerns about the private equity industry and money laundering. Can you talk a little bit about each of your organizations? Are you seeing issues around either of those topics? What are you thinking about in response to that? And whoever wants to go first can jump in.
If you want, I can start again, but Just to facilitate your reading of the various screens. I think that on these two topics, at least because our headquarters, global headquarters, are in the EU. So we are at TaxIM rather driven by EU regulation at the global level because of that. And from a European Union's perspective, definitely these two topics are important, but have been already, I would say, progressively tackled through various regulations. So I think there is an ongoing action at EU level from regulators on these two fronts, but it's not really new, I would say. Still, definitely at more global level, at the level of regulators. So, we have a worldwide regulatory body for securities regulators, which is IOSCO, the International Organization of Securities Commissions. The US SEC is part of it, the FTC as well, by the way, as well as the UK regulators, the French one and others, Asian ones and so on. And IOSCO is progressively there's digging further within these two spaces. So it may maybe change the life in non-European or non-EU countries, but still, I think that in Europe, it's still on the shelf. It's already on the shelf. And so IOSCO may facilitate maybe the convergence of regulators across regions on these two topics. But from a pure European perspective, I'm not so sure it will be fully new, I would say.
Interesting. John, any thoughts on this?
Yes, specifically on conflicts, I guess it's sort of something that I am seeing attract increasing attention, not only from regulators, but also actually from LPs and prospective investors in funds. It seems to crop up regularly in RFPs and due diligence meetings, sort of increasingly forensic lines of questions and follow-ups to really understand how firms sort of allocate investment opportunities between their different clients, how they deal with conflicts between the different strategies offered by the firms, and as I said, sort of really trying to understand at a deep level how conflicts are managed. Is it something that's a tick box exercise by your compliance function, or is it something that really is sort of bought into and by the firm as a whole as a sort of cultural matter? What levels of disclosures and transparency do firms offer over their management of these conflicts? Is definitely something I'm seeing attracting more attention. I also agree with everything Stéphane said about the IOSCO getting increasingly interested in this area.
Sabine, one of the things that we talked a little bit as we were preparing is kind of what comes next in terms of compliance programs and regulation programs. What are the things that your organization is really evolving on? Is it, you hear technology being a big driver of it, kind of what's next?
In terms of compliance programs, I mean, what is next is definitely that we continue looking into ESG. So Stéphane has touched on this, and because we see this as a global wave, it is something that we on the business side have been already very strong before regulators started really looking into this. But of course, regulators are changing the landscape, and I think this will be a very important project over the next 5 years, if not even longer, to enhance the way we look in that and to work with regulators as well on it. And then I think, of course, things like digitization are a big topic for us as well. Again, that's probably not a compliance program in a stricter sense, but it is. It's driving innovation in general. So we invested significant time and resources over the last 5 years already into looking into our IT infrastructure or opportunities on the innovation side, including artificial intelligence, obviously. And so we have the benefit as a bank-owned asset manager that we can work with our investment banking side and the wealth management side. So we can pool these sort of innovation efforts really together. And like what is quite interesting for us on the asset management side is now also efforts by the Commission, for example, to look into a new framework on digital assets. So we are very keen to understand what comes next here, so that we can look into this and find a business opportunity actually potentially in the way we can handle that. So I would say digitization and ESG are, from a European perspective also, you see it as big themes, like even the COVID recoveries. And when you hear Ursula von der Leyen, it's always like these two pillars that need to be taken into account really on the way forward. And of course, that's not only driving regulators and policymakers, that's something that is already inherent in an organization like UBS.
So we've talked about Asia and the US, we've talked about Europe. And John, I'll put you on the hot seat here. Are you seeing any significant changes out there, Middle East, Latin America, whether it's kind of business-driven growth or regulatory changes, or how your firm is thinking about it?
I've got not such great visibility on Latin America. In the US, I thought one interesting development that we have seen is this announcement by the DOL that managers of defined contribution pension plans can allocate capital to private equity without violating their fiduciary obligations. I'm not sure it's sort of saying anything groundbreaking as much as it's restating something that was obviously causing a huge amount of apprehension and nervousness in the DC community. And obviously we're passionate about private markets and passionate about closing the gap in performance between DC funds and DB funds. And we think a modest allocation by DC plans to private equity could contribute to closing that performance gap. And so it's very encouraging to see this announcement from the DOL. And obviously that's sort of aligned with what other regulators in Europe are doing, particularly the FCA is looking again at ways in which they can sort of unlock what they call the patient capital in the UK, and the Department of Work and Pensions is looking again at the sort of the charging caps that apply to defined contribution pension schemes. So that's sort of a big area of interest for us. Otherwise, in the US, and I know that Sabine and Stéphane both mentioned ESG, and obviously that's a huge area of focus for us for this year and for next year as we gear up for sort of implementation of the EU disclosure regulation. What is also interesting to me is it seems to me there's quite a gap between the US approach and the European approach, and it will be interesting to see how that evolves over time, particularly as we come up with the presidential elections, at the end of this year. I'm not a US expert, but my understanding is that the DOL in the US has sort of come out with some proposed rule that basically says that managers sort of should select investments based on sort of investment returns only, risk-adjusted investment returns, and not take into account any ESG considerations, which is obviously quite different to the proposed sort of EU disclosure regulation, which is encouraging managers to publish the way in which they take into account sustainability factors in their investment process. So it'll be interesting to see how that plays out as most global managers try and develop a sort of a global approach. So they're going to have to try and thread that needle.
It's interesting. You just mentioned, I think, what is the elephant in the room, at least for the US regulation side, which is the election. Right. Are any of your organizations kind of thinking ahead what changes if you see a change in administration and move back towards the Democratic side?
May I start?
Please.
Okay. So basically, it's interesting because at least based on the recent past and potentially in case of the election of Trump, I will not commit my firm. It will be more a personal opinion here. But I put some disclosure. But more seriously, I think that when Trump was elected 4 years ago, it was expected that he might, I would say, lighten regulation, generally speaking, in various industries. On the financial industry side, I think that there was no significant move, at least in the fund side, until recently. But as an example, a few days ago, the SEC launched a consultation to lighten the so-called prospectus regulation in the US for mutual funds. So on the pure retail fund side. So maybe if Trump is reelected, maybe he might develop further some regulatory lightening in the fund industry. But until recently, we have not really seen it. On the Democrat side, if Biden is elected, I think that, in fact, historically speaking, a significant part of the financial industry in the US was more supportive of Democrats historically. Maybe he might lighten the, I would say, the pure wholesale and Wall Street side, while keeping the retail side rather regulated, I would say. So, I mean, depending on I think that overall, I think the Democrat might keep a significant regulatory framework for retail, but maybe lighten it for the wholesale. But coming back to ESG in the US, maybe you have seen that recently, maybe 2 or 3 months ago, there was an advisory committee of the US SEC from the industry, which asked the SEC to be more involved in regulatory topics. Coming back to the point raised by John a few minutes ago. So I think that some part of the industry in the US is more and more concerned about this risk of competitiveness, of keeping competitiveness of the US industry vis-a-vis Europe and Asia, as Sabine mentioned, where ESG matters are more and more tackled by regulators. So some part of the US industry might be keen to see the US administration being more involved in ESG matters from a pure US industry competitiveness perspective, whichever president is elected.
You know, it's interesting being the American on this panel. There's two things that we're seeing change, and the SEC has taken a run at advertising to make it easier to sell all of our private funds. I think that's a wonderful thing we're seeing. We're seeing the move into pension plans being able to invest, as John mentioned before. But I think the really big thing that you're seeing more and more of is a lack of enforcement actions in the United States. You know, the examination teams are still out there. They're still doing reviews and audits, but you're just not seeing the gotcha enforcement kind of hammer being dropped. And, you know, I don't care what your politics are. I'll always take an environment where there's less enforcement of good firms, to be honest with you. Now, we're running out of time. We've only got about 4 minutes left. I'd love to go around the horn and get one closing thought from each of you as we send folks off into the rest of the day. You know, by cocktails this evening, they'll have forgotten some of the things we've said. What's the one thing you want them to remember and think about when they go back to their office? And John, let's start with you.
One thing to remember. Just want to say quickly on the presidential election. I think a lot depends. It's not just simply a question of who wins the election, but also who wins the Senate. So as we're all speculating, about what might happen if Biden wins, I think a lot also turns on what happens within the Senate, because
and what happens to Elizabeth Warren?
Exactly, and what happens to Warren and her she gets her clause into PE or not. So I'll leave you with that thought.
Sabine.
So I think what will be really interesting or next year onwards is whether we will see a split of regulatory regimes. So divergence between the UK, the EU, the US going its own way, for example, on ESG, further under a second Trump administration, or whether we continue actually what has been done under the financial crisis, this collaboration with regulators and trying to come up with a coherent framework So how much of harmonization will we see internationally? How much of regulatory arbitrage or competition will happen in a world that's increasingly split over certain aspects such as ESG, but other aspects as well. That's going to be very interesting.
That's interesting. Stéphane, please, with the closing thought.
Okay, I would take investors' perspective based on our experience at AXA IM. Definitely these days in various regions, investors are asking for ESG products. So definitely we will have, with regulators or without regulators, to adapt to ESG, not only from a regulatory perspective, but also from an investor's request perspective. This is definitely, I think, a global trend. And even in the US, we are seeing some part of that for some investors. The second point of, I would say, vigilance, it was briefly tackled by Sabine regarding Hong Kong, is about outsourcing. So John spoke about delegation of implicitly, I think, portfolio management, but more and more in Asia, in Europe with ESMA and others, regulators are concerned about outsourcing of IT functions and other types of very technical aspects of fund managers. And so we will have to anticipate a risk of higher regulatory framework when we outsource IT functions or activities elsewhere, which is by definition necessary. So we will have to be very vigilant on outsourcing of IT in the next few years.
Great. Hey, let me give one more from the US side. For the European funds that are selling their funds in the US, operating as ERAs, exempt reporting advisors, which is many fund groups. The SEC is focused on them. We're seeing more exams around ERAs, some for foreign funds, some for the venture funds that operate under the same exemption. So if you've got an ERA, that's something to kind of follow up with your counsel and compliance providers and start thinking about what an SEC exam looks like. With that, I'd like to first thank the panel. It's really been easy to work with all of you because it's a great group of professionals. We encourage participants. We didn't have a lot of time for questions, so feel free to reach out to us through the conference app. We're all happy to jump on a call through that and talk about what we've been discussing here today.